The Walt Disney Company is one that some of you love and some of you hate. The company is in no shortage of controversies over the last several years. Its political policies have raised some outrage with some individuals, its movies, its political stance, etc. But what about the company itself? The financial analysis, the cash flow, the earnings, the revenue. How much is the company worth per share? That's what I'm going to answer in this video, looking at Disney's discounted cash flow valuation. I'm going to use several estimates and assumptions to conclude what I believe is Disney's intrinsic value per share. Now, this should be used for entertainment purposes only. As you'll see, I'm using a lot of estimates and adjustments, but I'm going to share with you precisely where I'm getting all of the numbers so that you can judge for yourself whether or not the numbers are accurate, too optimistic, or too pessimistic. Let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so one of the first numbers I'm going to need is Disney's current market price. I need this so that I can compare the intrinsic value with the market price so that I can decide if the stock is undervalued, overvalued, or fairly valued. The next number I need is Disney's trailing 12-month free cash flow, which stands at $7.958 billion. You can see this huge rebound here for Disney's free cash flow as the company is recovering robustly from the devastations caused to the business by the coronavirus pandemic. Disney relies a lot on bringing large groups of people together for its business, and that was devastating during a time when there was a deadly disease out there. So Disney's recovering very nicely from those devastations. The next number I need is its diluted shares outstanding, 1.83 billion shares outstanding, and then the long-term debt of 47.58 billion, and Disney's market cap of 173.47 billion, and finally its cash and equivalents balance of 5.954 billion. I also need Disney's beta, which stands at 1.4. I'm getting this number from Yahoo Finance. And then I need Disney's growth rate for the next 5 years expected. According to Wall Street analysts that are following Disney stock, they think it's going to grow its earnings per share at 15.4% over the next 5 years. And this is partly due to the recovery from the pandemic, partly also due to the robust growth in the streaming business, which is offsetting the declines in the cable business. And the streaming business is just now turning profitable, and from this point forward, after it hits this inflection point, the profits are going to grow exponentially from here because it's already spent a lot of the money that it needed to spend to stand this business up. And from here on out, each incremental subscriber adds meaningfully to the bottom line because Disney doesn't need to spend all that much money to attract another subscriber. All right, so let's look at this discounted cash flow valuation model now, and let me draw your attention here where I have the 2024 trailing 12-month free cash flow, which I got from Y-Charts at 7.958 billion. From this point, I'm going to grow these free cash flows for the next 5 years at the short-term growth rate of 15.36%. And then after the first 5 years of 15.36% growth, I'm going to forecast the company's growth rate slows down to half that rate at 7.68%, and then it finally settles down to its long-term growth rate of 5% starting the year 2035. So as I've forecasted these free cash flows from 2024 to 2034, I need to also discount those free cash flows back to today because money in the future is not worth as much to us as money today. So when we're expecting money in the future, we need to discount those cash flows. Well, what rate do you discount those cash flows? It's at the weighted average cost of capital, which I have here at 10.45%. To calculate the weighted average cost of capital, I used Disney's beta of 1.4, and I applied it to the capital asset pricing model, which takes the risk-free rate and adds it to beta times the market risk premium. The market risk premium is 6%, the risk-free rate is 4%, and when you add that with the beta, you get a cost of equity according to the capital asset pricing model of 12.4%. Given that Disney's total market cap is 173 billion and it has 47.58 billion in debt, I have the company's debt to equity at 33% debt and 67% equity. Now, let me draw your attention back up here to the present value of those free cash flows I forecasted at $91.2 billion is the present value of all those free cash flows between 2024 and 2034. Next, I have the present value of the terminal value, which comes in at $167 billion. And the terminal value here I have at $453 billion. This collects all the free cash flows expected from the year 2035 out to infinity. Instead of forecasting all of these free cash flows individually out to infinity, we can use a shortcut that takes the free cash flow in year 2035 divided by the weighted average cost of capital minus the growth rate, and that gives us the terminal value at the year 2034 of $453 billion. Then we need to discount that back to today using the weighted average cost of capital, which brings us to the PV of the terminal value of $167 billion. When we sum those two together, we get a value of operations for Disney at $258.9 billion. But we're not finished yet. We take the value of operations and we need to add the cash balance and then subtract the debt to get the value of equity at $217 billion. We take that value of equity and we divide it by the number of shares outstanding so that we can determine what's the price per share. And when we do that, I get a price per share, an intrinsic value per share of $118.76 for Disney stock. This is my base case intrinsic value per share calculation for Disney stock. According to these estimates, according to my discounted cash flow valuation, I think Disney stock is worth about $119 per share. Now, when you compare that with the current market price of $95 per share, you can see the Disney stock price is undervalued by roughly 20%. But of course, I've used several estimates and assumptions here to make this stock price conclusion, and this shouldn't be the only tool that you use to make your determination of whether or not Disney stock is under or overvalued or to make a purchase decision. This should just be one of the inputs in your overall stock evaluation. Of course, I have dozens of videos on Disney stock on my channel. I encourage you to do more due diligence before making a decision on Disney stock and then come to a conclusion on whether or not you feel like the stock is under or overvalued. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.